where's the bottom for the Dow? Is it 10,000? Where's it going to go when the debt market melts down? What is that going to do to the multiples that, for example, the S&P 500? I think they can be cut into single digits from their current almost 30 with regard to the PE ratio. So I believe with regard to the Dow, we're going to get a 1-to-1 ratio gold. So Dow 8,000 sounds realistic to me in a full-on debt market meltdown. And that would mean a 1-to-1 Dow gold ratio. Now, with regard to silver, I mean, is it possible we could see a 10-to-1 gold? Yes, in an extreme panic kind of situation, which we probably will get. But I say it's more likely going to be 15-to-1. I don't think there's a single asset today, including commodities, that has a real price discovery mechanism behind it at all. I don't even care what the price action is in the short run. What I do is I try to evaluate where the eventual market is going to go and how that's going to affect gold and silver. So in my opinion, looking at everything that I look at, which is a lot of stuff, a lot of data, I say, okay, Greg, where's the bottom for the Dow? Is it 10,000? Where's it going to go when the debt market melts down? What is that going to do to the multiples that, for example, the S&P 500? I think they can be cut into single digits from their current almost 30 with regard to the PE ratio. So I believe with regard to the Dow, we're going to get a 1-to-1 ratio gold. Dow 8,000 sounds realistic to me in a full-on debt market meltdown. And that would mean a 1-to-1 Dow gold ratio. Now, with regard to silver, I mean, is it possible we could see a 10-to-1 gold? Yes, in an extreme panic kind of situation, which we probably will get. But I say it's more likely going to be 15-to-1. I don't think really at all about the price. If I see gold or silver dump 2, 3, 5%, silver's all over the place. As you know, it's much more volatile than gold. Gold's pretty stable for the most part. But when you see a big sell-off here, like in silver, is that real silver changing hands? Is it truckloads of silver moved around? No, it's the paper derivative market, unfortunately. So I don't care. Let them play their games. I'm going to continue to play mine along with my Lions out here. I want to give my Lions a shout out. And I can't imagine a way that we can lose if we're hedged across the board, if we understand the movement of cash through the markets. It's too easy. So, and that scares me. When something becomes too easy, you got to start to say, whoa, hold on a minute here. That's when maybe the switch will flip the other way. We got to be ready for it. And then we're all ready for it, I think. At least I hope so. The people that follow our work, I really think that more than likely these people already know everything we just said. They're already way ahead of the curve. They understand that they should bet against the system, become their own central bank, holding hard assets, gold, silver, my favorite asset of all time. That's really it, man. It's just really comes down to just a very few concepts, and we win. It's that simple. I always tell people, this is stuff you got to pay attention to. And it doesn't mean we need to run for the hills at all. We just need to sit here, evaluate the situation, elevate our awareness, pay very close attention to what's happening around us, the debt market specifically here, and then take the appropriate action. Stay hedged in this market, and you're hedging yourself by being long commodities. Gold, silver, my favorite asset of all time. Realizing that at one point this multiples expansion cycle is going to contract, and I mean it's going to contract so fast that people's heads are going to spin around like the movie The Exorcist. I don't know if you've ever seen it, but that's what it's going to do. And cash is just going to move again into other assets. So you got to stay hedged. And just this morning, I have a free newsletter. I told people, actually, matter of fact, this is it right here. This is what I sent out to my newsletter here. And just to outline real quick, I wrote no fear, how to play beyond the selection here. I said, look past the selection starting now. And how to play it is, number one, understand that there is no way out of vastly expanding global debt, along with artificially suppressed rates and therefore currency devaluation, okay? Number two, the mechanism of expanding debt, artificially suppressed rates, currency devaluation will cause a much lower standard of living for the middle class. And number three, until the debt market tells us differently, focus on what the MMR, like I was saying, we do not change anything regarding our strategy to stay long the market. Okay, Buffett's getting out, definitely an eye-raising experience. Moreover, and at the same time, we continue to bet against the system by owning and holding physical gold, silver, and I wrote here at the end, and I also believe that any drop in the crypto space should be bought. That's basically what I will do. I'm planning on doing. This is exactly the same strategy that I have implemented now for years. I'm not going to change it until the debt market tells me not. Oh, no Oracle of Omaha, whatever is going to change my perspective on these things. Quantitative easing. I'm sure you're familiar with this, but most people, they hear these terms. It gets thrown out there by the CNBCs, but people have no idea what it means. First of all, how does a central bank keep rates low? Do they have a magic wand? Do they have the power to say something and it just happens by decree because they're divine entities? Absolutely not. So when the central bank, in this case, I'm laughing, the Federal Reserve says, hey, you know what, everybody, what we're going to do is we're going to keep rates suppressed. That means they have to get into the market and buy the debt to keep rates suppressed. I mean, people have no conception of this. And the more that occurs, the wider that door opens for cash to make its way into risk assets. Now, I want people to pay attention to a phenomenon that was happening and it's kind of flipped around a little bit. Beginning in June of this year, we started first of all, we saw the yield curve here in the United States uninvert. Number two, before that even happened, we started to see the 10-year yield nosedive, just lower. And of course, what did that do? Well, we can just put it into this kind of a perspective. This year alone, the S&P 500 here in the United States, obviously, has hit 47 new record highs. That's the mechanism. So back in June was when the Fed really got in here and started implementing full-on quantitative easing. We don't need to be told what they're doing. All we need to do is pay attention. Who's in here? Who's in here making sure that rates are suppressed? Who's involved in what seems as clear as day to me as yield curve control to kind of put investors' minds at ease? Don't worry. Keep putting your money to work here in the stock market. It seems to have worked here. Like I'm saying, 47 record highs, regardless of the economic news here with business activity and factor. It's just an incredible thing to see. And that's why I focus like a laser beam on what's happening in the debt market, because it's going to tell us what we need to do. I don't like to guess. Okay. I created a neat little toy. It's called the MMRI. I don't know if you're familiar with this. It's the Mannarino Market Risk Indicator. It is 100% free to anybody who wants to use it. It's on the second page of my website. Basically, what this does is it quantifies what's happening with regard to the currency, or the Dixie, the relative strength of the dollar, and the 10-year yield, which is the benchmark. Comes up with little neat equation, and it tells us what's going on here in the debt market here. And I urge people to check this out. It's color-coded, it's numbered, and it's also graphed. I look at this thing every day, even though it's my little I created this for myself, and then I said, hey, you know what? This little tool is kind of neat. I'm going to share it with everyone, of course, for free, and let people utilize this as, I mean, it's not the end all, man, but it is a tool that we can all use to better gauge what we should do. Because that's what all people want to know, is we have this twisted environment. We have central banks here rigging the whole system to the highest order here. So what do we do about that? Do we sit back and suck our thumb off in some corner, or do we take action? My view is we, the people, need to take action to protect ourselves in this environment. And it doesn't seem like a hard thing to do, understanding the dynamics that are in play. I know I'm kind of talking a lot here, but I just want to set the stage.